Good evening and welcome to the earnings review, your tidbits into company financials and operational insights. Thank you for joining us as we broadcast from our Hampton studios in Harare, Zimbabwe. I'm Ibn Mabunda, yo money man. On the show, we engage top echelon executives to get you up to speed with first-hand information. We also chat with competent market analysts just to ensure you're furnished with relevant and comprehensive market analysis. Tonight, we focus on Star Africa Limited, a listed sugar producer on the Zimbabwe Stock Exchange. Now, this is, of course, one of the largest sugar producers that we have in Zimbabwe. And just before I introduce our guest on the show tonight, we will take the time to get into the details with regards to the operations of the firm and a little bit of the history just to understand how the firm has evolved over the years. So follow me as I take you on a jog down memory lane. The firm was founded in 1935 as the Rhodesia Sugar Refinery. 1947 would mark the listing of the firm on the local bourse. Now, with the years that followed, you'd realize that there were a series of acquisitions that the firm underwent, as well as also a series of acquisition of other units that actually took place. In 1956, the firm would launch what would be known as the Harare Refinery. 1974, the acquisition of a wholesale division. 1979, the acquisition of Polyfilm Plastics. 1986, the rebranding of the wholesale division to Red Star Wholesalers. 1992 would mark the formation of Blue Star Transport. 1994, the acquisition of Sugar Industries in Botswana. In 1995, acquisition of Highfold 2002, management buyout resulting in the localization of the ZSR Corporation Limited. 2003, acquisition of Advanced Wholesalers in Bulawayo. In 2004, ZSR Transport opened in Johannesburg, South Africa. This, of course, was part of the group's original integration. 2006 would mark the acquisition of R. Chitrin and Company. 2006, the rebranding of ZSR Corporation to Star Africa Corporation Limited. And in 2016, the disposal of Blue Star Logistics. Now let's get into how the firm is actually organized. This firm has three main units or three main SBUs: Gold Star, Country Choice Foods, as well as the Silver Star Properties. Under Gold Star, this is where you have mainly the sugar production in Harare and Bulawayo, where there is a combined production capacity of over 250,000 tons annually. Its products, where sugar is concerned, are distributed across Zimbabwe, Namibia, as well as South Africa. Under Country Choice Foods, the group manufactures different forms of sugar, to mention icing sugar, caster sugar, old-fashioned brown sugar, to list just a few. And of course, the firm has operations and a plant that operate here in Harare. The firm also has a property division which is involved in leasing management, as well as development of commercial, residential, retail, as well as industrial properties. Some vital stats: with a current share price of 51 cents, the firm has a market capitalization of over 520 million Zimbabwean dollars. The stock has surged 89%, surpassing the movement in the Zimbabwe Stock Exchange that is up over 65% to date. Now, joining me for a conversation over the operations of the firm is the Chief Analyst for Equity Access, Respect Gwenzi. Respect, good evening and thank you for joining us on the earnings review.
Thank you, Ibn, and good evening, viewers.
Fantastic. Now, this conversation, Respect, is coming in at a point where we are expecting the results of the firm to be released perhaps in the next set of weeks, and we are having a conversation that is anchored upon their trading update for the quarter ended the 31st of December 2020, which pretty much gives us a highlight in terms of how the group actually fared over the past year and over the past several months, getting into 2021, given the turbulence that has actually played out. But just in a nutshell, what, from a sector perspective, with that bird's eye view, what would be some of the key highlights that you see playing out where the sugar industry is concerned, and perhaps some of the macroeconomic indicators that would be of importance and of relevance where the operations of such entities would be concerned?
Thank you. So we're looking at 2020, which is the financial year that we are reviewing. Obviously, the macro environment has faced significant challenges emanating from an economic decline. GDP went down by between 6 to 10% last year, and that's quite huge for an economy that already had a recession as well in 2019. So that was the biggest challenge. But in 2020 as well, we saw Covid-19 pandemic hitting the global markets as well as Zimbabwe. And obviously this had an impact in terms of dragging aggregate demand as lockdown measures were put in place. So I think the context under which the company operated in 2020 is that of a harsher macroeconomic environment. And then when you look at a sector specific, the agricultural season was a bit, there was a drought, third consecutive coming in 2020, and obviously that weighed on production. And when you then look at the output that the company had to produce, obviously it was also equally down. That is on a cumulative 9 months to 12 months basis. So it has been a much harsher macroeconomic environment which the company had to operate in.
Now, to get into the trading update, over the quarter to the 31st of December, their sales volumes increased by 102%, while their production outturn surged 65%. What do these figures actually indicate?
So there are two things there. There are factors that affected the company from an organic perspective, and then there are those that affected the company mainly from a broader economic perspective. In Q4 of 2020, demand started to pick up across the market. This is attributed to a bit of a macroeconomic stability as the Zim dollar stabilized against the USD. I think if you look at the official numbers there, the decline in terms of the depreciation in terms of the currency was less than 5% over that period. And when you look at the forex sales going through the auction market over that period, a growth from 15 million a week to about 30 million a week. So that kind of stabilized industry. It also made planning far much easier, and trade actually came in at a better level compared to the prior periods. So that stability managed to redeem or salvage a bit of production and even aggregate demand losses that had been incurred in past periods. But I also think that from Q4 onwards, we also saw a rebound in the economy, which obviously had a relationship to the stabilizing inflation rate. So I think all those macro factors had an impact in terms of driving, especially the sales part. But also when you look at production, there are elements which demanded that the company acquire forex and import certain raw materials, and they were able to source some of that raw material. So this change in terms of the stability of the currency, I think it came in handy for the company, it came in handy for the broader economy, and hence the growth in both production and sales numbers in double digit levels.
Now let's talk about the importance of the fact that this is a firm that is also exporting to select countries within the region. They're exporting into Mozambique, they're exporting some of their products into Zambia. How important are these markets in creating value for the group?
Yeah, the export market is quite important, especially at a time when the Zim economy is struggling. You are diversifying risk. You are also giving room to earn foreign currency, which can counter the implications of an erratic interbank market. So I think it's quite important, especially now. Earning forex stabilizes cash flows. It also ensures that you also have got adequate flows to procure your imports. So I think it's a very important thing. But I think it also has to be looked at from the context of production. Is the company able to satisfy the local market? I think the company struggled a lot in terms of stabilizing its operation. They have had series of breakdowns in terms of their equipment, and the company usually take an unusually longer period of production timeouts. And I think this impacts on efficiency. It also impacts on the net output that the company generates. And so yes, the regional drive is a good thing. And when you look at the kind of investment that have been put, especially on the Harare plant, it's quite huge. It's definitely time for a good payback. But I think there's been these challenges associated with this Indian procured machinery that's installed at the Harare plant. And the Bulawayo plant has been mothballed since 2008. So it's basically 12 years without that plant. But the Harare plant has got the capacity to even do 600 tons per day. But then these, constant and frequent timeouts are a huge cause for concern, especially when you want to pursue the international or the regional markets that you've mentioned.
Now, talk to me about the other unit, which is the Country Choice Foods, which produces different kinds of sugars. Of course, it's one of their revenue lines that would be, of course, eclipsed by the contribution of the average or the normal sugar, as it were. How significant is that particular arm, and especially where the targeting of particular markets are concerned, perhaps the industrial markets, and also on the other hand, on the flip side, to do with the choice or premium markets?
Yeah, I think it comes in handy as a way of diversifying income. When you look at the contribution of sugar, it's way over 70%. And so obviously seeking ways to diversify this income, I think it's a good thing. It obviously stabilizes cash flow on a mid to long term basis. So what has been happening there is that the company, Country Choice, has been engaging in research and developments, trying to see the kind of products that the market is looking for and what they could obviously bring on the table. Obviously, they've had a range of products within that over the past few years, over I think a very long time from the last decade. So there's been a continual research and development program that has been going on, and right now they have got a series of new products that they are ready to usher into the market, and some have already been released. So I think it's a good thing, but it also hinges on capitalization. Is the main operation adequately capitalized? Are you able to take in more, cash flow demands from the new ventures that you're also that you're also pursuing? So there's always that cash flow demand, and when you look at how the company is overburdened with debt, I think there's always need for caution when you undertake new projects, or when you capitalize certain operations. So there's need for caution as they obviously navigate and try to diversify the portfolio.
Talking about caution, the firm has been issuing a series of cautionary statements dating back to the 4th of November, and relating to their involvement with the Zoom Asset Management Corporation. But I want us to elucidate where that particular subject is concerned when we come back from the break. Don't go anywhere.
Equity Live presents the complete online interactive presentation solution. Hosting AGMs, media and analyst briefings has never been this simple, efficient and affordable. Communicate globally through a combination of high-definition video and your prepared multimedia presentation from any location of your choice. Interact with your invited participants from all over the world in question and answer sessions and voting sessions in real time on our safe, secure and affordable platform. Contact Equity Live for a free customized demonstration. Equity Live, real-time presentation solutions.
Thank you for staying with us. We are in conversation over the operations of Star Africa Limited, one of the largest sugar producers here in Zimbabwe. And with me in conversation is the Chief Analyst for Equity Access, Respect Gwenzi. Now, Respect, before we took to the break, I made reference to the fact that there have been a series of cautionaries dating back to the 4th of November 2020 relating to Zamco, which is one of the key shareholders within the organization. And according to the cautionary statements, there is a statement that says that the firm is, in quotes, still engaged in developments that may result in a transaction that could have a material impact on the value of the company's shares. I mean, we've been seeing quite a significant number of cautionaries on the ZSE, especially in the last quarter of 2020 and this particular quarter of 2021. Would you be privy as to what's actually taking place within South Africa, or what could be brewing behind the scenes there?
Yeah, so if you look at the history of the company, one thing is quite clear. The company has struggled to capitalize its operation, but I think one of the key challenges is that over the period when the company was not producing, which is around 2008 thereabout, they accrued a lot of debt, and there has been that debt overhang over the past few years. So getting into the dollarization period, we saw some different forms of capital raise programs that were undertaken. NASA snapped a majority share. They also funded the acquisition of the Harare plant. But as the company progressed over the years as well, they were failing to really stabilize that operation, regardless of the kind of investment that had been put in place by the likes of NASA. So they had some debt overhang with a lot of local banking institutions, your Stanbic and so forth. And so they also went on to restructure part of that debt. So you're finding a top line that was growing because there was a plant which was now functional and producing stuff. But then you also had an operation which was a bit shaky on the cash flow side, because you are generating below your net costs, especially the financing cost. So they resolved to further restructure that debt, and that's how Zamco came into play. So Zamco came in and capitalized the operation, but the company saw it fit at a later stage to convert that debt into equity, and Zamco also emerged as the biggest shareholder. But as you know that Zamco is now, it has been wound up like 1.5 years ago. Government decided that the operations that Zamco had sought to undertake, cleansing the banking sector, has been fulfilled. So the entity was, it was almost shelved. So I think what we are seeing now is also attempts by the company to further restructure. We might see Zamco foregoing its stake to another player for cash, and this money that Zamco poured into the company is state funds, and obviously those funds are needed elsewhere. So I think the restructuring was always going to come, given that the operation has been failing to put itself on a firm financial footing. So this cautionary is not really something out of the blues, but it also falls in line with what you're seeing elsewhere across the market. A number of companies, Delta, MedTech, you name it, a whole lot of these companies are in a series of cautionaries. I think the change in the macro environment from 2019, when the currency changed, obviously it required most companies to change tact, and this meant doing business differently. Sometimes it means consolidating operations, it means measuring in some instances. It also means foregoing certain stakes, maybe with some international technical partners. So I think a whole lot of companies are involved in a series of transactions as a way of restructuring business, as a way of refinancing their businesses and remodeling their businesses in line with the new realities that were brought in by the new currency, the Zim dollar.
I realize. Now, earlier on you made a reference to what's actually playing out in the macro economic environment. Given the fact that there has been a projection by Treasury to say in 2021 there is expected recovery, with the economy anticipated to grow by a whopping 7.4%. Can you tell us about the feasibility of that and how that trickles down to industry players and ultimately South Africa?
Yeah, so government anticipates that for 2021 growth will come in at about 7.4. But the background of it is that for 2019, as I mentioned earlier, GDP declined by almost 10%. We think that for 2020 there was a similar double-digit decline. And that recurring recession to us is a dangerous thing, because it could possibly lead economies into depressions, and depressions are hard to come out of. And so for a company to come out of a recession, you need to stimulate aggregate demand. But fortunately for us, much of our economy is hinged on two key sectors, and this is the mining sector and the agricultural sector. So for the mining sector, there were a whole lot of issues that dampened performance in 2019. Yes, there was a growth, but it was not the kind of growth that we expected. If you look at the key mineral being gold, we did 19 tons. We were supposed to do at least 27, to match the prior year. Historically, we have gone even up to 33 tons. And we have a potential to even go up to 100 tons per annum. We do have got that potential, but we did a measly 19 tons. The challenges there in that sector were mainly to do with policies and a stable currency, which drove players, especially the small-scale miners, to side market their product. Large-scale miners also, reducing the level of production so as to preserve value. Why? Because you have got a retention system which chews into value, whereas miners they are mandated to forgo about 40% at the prevailing interbank. You have got a wide-off rate that's prevailing on the black market, and that difference is a cost to miners. So this is one of the key challenges that miners faced, and they took a decision to cut back on production, and some were even side marketing. So there were challenges in terms of the produce that we should have achieved. Had we done at least, if we had maintained the 2019 levels of 27 tons, we could have easily done 2 billion in terms of annual receipts, gold annual receipts, and that could have stimulated a whole lot of variables, GDP. It could have also stimulated our net export position. So all these things were dampened because of the policy and the environment that we prevailed in. But when you look at the agricultural sector, it's mainly a result of the weak performance over the past 3 years. Has been a result of drought, and now that we had better rains in the just past season, obviously there's expectation that these two key sectors might rebound strongly, given as well that the currency market so far has been performing well, but it's far from perfect. And I also think that there are some underlying challenges which might drive the short-term performance into another volatility as well. So that's the background in terms of the macroeconomic environment for 2020. But for 2021, this is what the government expects, and obviously we also see a growth, but maybe not as high up as what government sees.
Quite a vivid diagrammatic, if you allow me to say that, in terms of the presentation of the macroeconomic framework. Now, to sort of come back to the sugar sector itself, how worried is Gold Star in as far as its competitors are concerned, given you've got Tongat on the one hand, then you've also got other products that could perhaps be coming in through illegal channels into Zimbabwe?
So that has been the challenge. Whenever you are in a recession, aggregate demand is falling, and consumers, because they have now less disposable incomes, they trade down the value chain. So what do you do when you have grey imports which are better priced? You always tend to want to preserve value, and you go for those. So all these the macroeconomic challenges, they have militated to put pressure on companies that are doing things on the formal side of things. So I think for Star Africa, this has also been the challenge. But when you look at Tongat, they have got a strong parent in South Africa, and they have also been adequately capitalized. So it puts them on a firmer footing, and they've been competing on the processing side. But on the production side, it has been mainly Tongat that has been dominant in that space.
Well, thank you, Respect, for the insights. We do hope that with the current restructuring that could be taking place behind the scenes, Gold Star could soar to reasonable heights.
Thank you.
Thank you for staying with us. Don't forget to like, subscribe, follow us on Twitter, Facebook, and to visit our informative website, www.equityaccess.net. Remember to catch us every Tuesday, every Thursday, 7 p.m. Central African Time on this very same platform. Ibn Mapunda from Harare. This is Equity Access.